Welcome to The Deep Dive, the show that gives you the direct insights you need, cutting through the noise. Today we're diving headfirst into one of the most exciting transformations in technology, the explosion of AI and the foundational companies making it all possible.
Yeah, it's moving incredibly fast.
It really is. And specifically, we're dissecting Advanced Micro Devices, or AMD, a company truly, at the forefront of high-performance computing.
And our mission for this deep dive is, well, to really understand AMD's 2024. We'll unpack their financial performance, dig into the major trends and strategic moves across their key business segments,
Right.
and then analyze their plans for shareholder value. Ultimately, we want to assess their strategic direction moving forward, especially as AI continues to redefine the tech landscape.
And to do this, we're going straight to the source. AMD's very own latest annual report, their Form 10-K for 2024. This isn't just a summary. It's a direct, unvarnished look at the company's own insights and data.
Exactly. Straight from the horse's mouth, so to speak.
So by the end of our conversation, you'll have a clear understanding of what fueled AMD's results, where they're pouring their innovation, and the significant opportunities and challenges they navigate in this incredibly dynamic industry.
So let's kick things off with the big picture for 2024. AMD's annual revenue grew by a solid 14%,
Okay.
hitting $25.8 billion, which is up from $22.7 billion in 2023. But what's truly interesting here is that this growth wasn't, evenly distributed.
Right.
You had record performances in their data center and client segments, essentially offsetting some declines in their gaming and embedded businesses. That tells you a story of sort of shifting priorities and market dynamics.
That's a fascinating split. It really hints at a company in transition, doesn't it?
Definitely.
And speaking of transition, let's talk about the data center segment. This was, without a doubt, the absolute powerhouse for AMD in 2024.
Oh, absolutely.
Its net revenue didn't just grow, it surged by a massive 94%, hitting $12.6 billion, almost double the $6.5 billion from 2023. What drove that incredible acceleration?
Well, it's primarily driven by a significant ramp in sales of their AMD Instinct GPUs and AMD EPYC CPUs.
Okay, the key product lines there.
Right. But this isn't just about higher sales numbers. It signals a critical strategic pivot. AMD successfully scaled its data center AI business to more than $5 billion in annual revenue.
Wow, $5 billion just for the AI part of data center.
Exactly. And we're talking about major players like Meta, Microsoft, and Oracle now deploying AMD Instinct MI300 accelerators in large-scale production environments. This isn't just testing the waters. It's a fundamental shift in adoption.
That's huge validation. And it sounds like they're not slowing down either.
Yeah.
What's next on their AI hardware roadmap? Are they keeping the pedal down?
They are. They launched the AMD Instinct MI325X GPUs, which they claim offer industry-leading inferencing performance. And crucially, they've accelerated their AI hardware roadmap, committing to an annual cadence of new accelerators, like the upcoming MI400 series.
An annual cadence. That's aggressive.
It shows they're not just playing catch-up, they're really pushing to be a continuous innovator in this space, trying to set the pace.
Makes sense. But beyond the raw hardware, the software ecosystem is always crucial for AI adoption, right? How are they building that out?
That's a great point. They've significantly enhanced their RICM AI software stack, and that's had a tangible impact, boosting the inferencing performance of those MI300X accelerators by an incredible 2.7 times since their launch.
2.7 times. That's significant.
It is. This is vital because, top-tier hardware needs robust, optimized software to truly unlock its potential. And meanwhile, on the CPU side, their server CPUs, the EPYC processors, are achieving record market share.
Right. EPYC's been a strong performer for a while.
It has. These are being widely adopted across cloud, enterprise, and supercomputing environments. We're seeing big names, Forbes 2000 companies like Adobe, Micron, Nestle, and Verizon deploying EPYC servers for their mission-critical workloads.
And their latest EPYC processors, the 5th Gen family, I saw they set over 540 performance world records. That's quite a statement.
It's a very strong statement. And they mentioned all their cloud partners are planning deployments, with over 120 platforms on track.
So the momentum seems strong. What about future strategic moves to deepen their AI footprint even more? Any big acquisitions or anything?
Well, looking ahead, AMD also announced its intent to acquire ZT Systems.
ZT Systems.
They're a leading AI infrastructure provider. The deal is for approximately $4.9 billion, primarily in cash and stock. Now, this isn't just about acquiring another company. It's a strategic move.
How so?
It's aimed at strengthening their systems capabilities and accelerating the deployment of their AI solutions at scale. It means they're looking to provide more complete, sort of turnkey solutions, not just selling individual chips.
Okay. Moving up the stack a bit, that's a significant vertical integration play, but it's not all smooth sailing in data center, I imagine. What are the major competitive and regulatory headwinds they're facing?
You're right, it's intensely fierce. They're up against the giants, Intel and NVIDIA, of
The
course.
usual suspects.
Exactly. But also smaller fabless companies, and interestingly, even their own customers who are developing internal custom silicon solutions.
Right, the rise of custom silicon.
And then you have the significant challenge of U.S. export control regulations. These restrictions, particularly on sales to certain countries, including China,
Yeah, the D1, D4, D5 groups.
precisely, those can directly impact their market access for advanced computing products, potentially, throttling growth in what could be a crucial region for AI development and deployment.
And there's supply chain dependencies. That's always a big one in semiconductors, isn't it?
Yeah.
The reliance on foundries.
Absolutely. There's significant reliance on third-party foundries like TSMC, Global Foundries, UMC, and Samsung, plus various assembly and test partners. It creates potential vulnerability.
And what kinds of issues?
Well, it can lead to supply constraints, potential yield issues if manufacturing isn't perfect, or even impacts from broader geopolitical events that disrupt those supply lines. It's a constant balancing act.
Okay, that makes sense. So moving on to the client segment, you said this was another area of strong resurgence for AMD.
It was. Annual revenue here increased a remarkable 52% to a record $7.1 billion in 2024. That's up from $4.7 billion in 2023.
Wow, 52%. That's a huge jump. What's driving that kind of demand for their Ryzen processors?
It was driven by two things mainly. A 34% increase in unit shipments, so selling more chips,
Okay.
and a 13% increase in the average selling price, meaning they're selling richer mix or getting better
So
pricing.
more volume and higher value.
Exactly. It indicates strong demand for their AMD Ryzen mobile and desktop processors. And a significant focus here, a key driver really, is the emerging AI PC market.
Yes, the AI PC buzz.
Right. AMD launched their Ryzen AI 300 series with what they state is the industry's fastest NPU, neural processing unit, delivering 50 TOPs, that's trillions of operations per second for these new Copilot Plus PCs.
And are the PC makers buying in?
It looks like it. They mentioned over 100 platforms already announced by major OEMs like Acer, Asus, Dell, HP, and Lenovo. So broad adoption right out of the gate.
And for the commercial market, the businesses, I understand they have a specific offering there too.
They certainly do. They expanded with the Ryzen AI PRO 300 series. These are specifically designed to bring enterprise-class security and AI capabilities to Copilot Plus PCs for businesses.
Makes sense. Security is key for enterprise.
Absolutely. And what's potentially unique here, something AMD highlights, is that they claim to be the only provider offering a complete portfolio of CPUs enabling these Copilot Plus experiences across all the different types of notebooks: premium, ultra-thin, commercial, gaming, and mainstream.
That's a strong positioning statement if they can maintain it.
It is. It gives them a broad reach.
That certainly sounds like a unique advantage, but competition in the PC space is always fierce. Who are they primarily up against? Still Intel mainly.
Primarily Intel, yes, that's the historical rival, but there's also a growing presence of ARM-based PC solutions chipping away at the edges.
Right, like Qualcomm and others?
Exactly. The biggest challenge for the client segment, though, is probably that demand is directly linked to the AI PC adoption rate. While it looks promising, this is still an evolving market.
So it depends on how quickly consumers and businesses actually buy these new AI PCs.
Pretty much. And historically, this segment has faced declines due to shifts in form factors, tablets eating into laptops, intense competition driving prices down, and just the general PC replacement cycles. It can be volatile.
Okay, now let's pivot to a segment that actually saw a decline. Gaming.
Yeah.
Annual revenue dropped quite significantly, 58%, down to $2.6 billion in 2024 from $6.2 billion in 2023. What's the story there?
Yeah, that's a steep drop. The primary reason given was lower semi-custom product revenue.
Semi-custom.
Yeah.
And that's the console business, right?
Yeah, exactly. It's crucial to remember that AMD's semi-custom SoCs, their system on chips, power major consoles like the Sony PlayStation 5, including that new PS5 Pro with enhanced graphics and AI,
Right.
the Microsoft Xbox Series S and X, and also handhelds like the Valve Steam Deck PC.
So their revenue in this segment is really tied to the console lifecycle.
Precisely. It's highly dependent on the success of these customer products and their console refresh cycles. And AMD has no direct marketing control over when Sony or Microsoft decide to launch a new console or a mid-cycle refresh.
So if the console makers don't release a new generation or big refresh, AMD's revenue in that area takes a hit, regardless of how innovative their chips might be.
That's basically it. Plus, they face stiff competition from NVIDIA in the discrete graphics card market for PCs, and from Intel in integrated graphics, which impacts their broader Radeon gaming GPU business outside of console.
Okay, that makes sense. It's very cyclical.
Highly cyclical. And finally, the embedded segment also faced some inventory headwinds. Annual revenue there declined 33% to $3.6 billion in 2024, down from $5.3 billion in 2023.
And that was largely due to customers working through the inventory they'd built up earlier, correct? Kind of a normalization.
That's right. Customers were normalizing their inventory levels after maybe over-ordering during periods of high demand or supply chain uncertainty.
Got it.
But despite that revenue dip, AMD continued its portfolio expansion here. They're focusing on differentiated solutions, things like launching the industry's largest FPGA, the Versal Premium VP1902, new generations of Versal for Edge AI, and new Ryzen and EPYC embedded processors aimed at specific markets.
Like what kind of markets?
Things like machine vision, robotics, networking, and even specialized areas like ultra-low latency financial trading with their Alveo cards. It's a very diverse segment.
It sounds like it. A lot of different niches. What does their pipeline look like for embedded? Is there a reason for optimism despite the recent dip?
There is, actually. What's very promising for the future here is that they closed a record $14 billion of design wins in 2024.
$14 billion in design wins.
Yes, which they state is a 25% plus increase year over year. This indicates growing customer adoption of their adaptive computing platforms, FPGAs, and SoCs, which should, translate into future revenue down the line as those designs go into production.
That's a strong leading indicator then.
It is. However, challenges remain. There are still ongoing inventory normalization cycles, the general cyclical nature of the semiconductor industry we talked about, and the constant need for timely product introductions that meet very specific evolving customer requirements in these embedded markets.
Right, you have to hit the market window.
Exactly. Competition is also broad here: Intel, Lattice, Broadcom, NXP, Qualcomm, TI, among others.
Okay, so we've broken down each segment: data center roaring, client rebounding strongly, gaming and embedded facing some headwinds, but with underlying strengths. Let's pull back a look at AMD's overall financial health and how they're thinking about shareholder value. Despite those segment challenges, their overall gross margin actually increased to 49% in 2024, up from 46% in 2023. How did that happen?
That's a direct result of that favorable shift in their revenue mix we mentioned earlier.
The higher margin data center and client sales becoming a bigger slice of the pie.
Exactly. Those segments generally carry higher margins, so as they grew faster than gaming and embedded, it pulled the overall company margin up.
Improving overall profitability.
And this positive mix had a significant impact further down the income statement, too. Operating income surged to $1.9 billion in 2024. That's a dramatic jump from just $401 million in 2023.
Huge increase.
Driven by that higher revenue and better mix, even as they substantially increased their research and development investments.
And that flowed through to the bottom line, net income.
It did. Net income increased to $1.6 billion, up from $854 million in the prior year. So a substantial improvement in profitability overall.
Speaking of expenses, you mentioned R&D went up. What did R&D and SG&A look like?
Right. R&D expenses increased 10% to $6.5 billion. They stated this was largely due to higher employee-related costs directly supporting their ambitious AI strategy. You need top talent for that.
Makes sense. Investing in the future.
Definitely. Marketing, general, and administrative expenses, MG&A, also rose 18% to $2.8 billion, which you expect as it supports that overall revenue growth. Interestingly, though, amortization of acquisition-related intangibles actually decreased by 15% to $2.4 billion.
Why was that?
Simply because some of those intangible assets from past acquisitions, like V-Links maybe, became fully amortized in the prior fiscal year. So that provided a slight tailwind to reported profitability.
Okay. How does their balance sheet look after all this activity?
Okay.
Cash position?
Yeah.
Debt.
Pretty healthy. AMD ended 2024 with $5.1 billion in cash, cash equivalents, and short-term investments. That's a slight decrease from $5.8 billion at the end of 2023, but still a solid cushion.
And debt?
They actively managed their debt. They reduced total debt down to $1.8 billion from $2.5 billion, primarily because they repaid $750 million in senior notes that came due.
Good to see them paying down debt.
Yep.
What about working capital?
Their current assets actually increased to $19.0 billion from $16.8 billion. This was driven primarily by higher accounts receivable, basically, more customers owing them money from those increased sales, and also higher inventories.
Higher inventory. Is that a concern or expected?
Likely expected, at least partly, to support those new product ramps we discussed, particularly in AI and client. You need inventory on hand to meet demand for new launches.
Got it. And their cash flow from operations, was that strong? Did the higher profit translate into cash?
Very much so. Cash flow from operating activities provided a strong $3.0 billion in cash in 2024. That's a nice increase from $1.7 billion in 2023.
Almost doubled.
Yeah, primarily from their net income and adding back non-cash charges like depreciation and amortization. Though it was partly offset by those increases in accounts receivable and inventory we just mentioned, which use cash.
Okay, and what about investing activities? Where do they put cash to work?
Investing activities used $1.1 billion in cash. This included purchases of short-term investments, capital expenditures on property and equipment, and strategic acquisitions. Notably, they mentioned acquiring Silo AI for $665 million in cash.
Silo AI, another AI play.
Seems like it, yes. Net cash used for that acquisition was $548 million after accounting for cash acquired.
So they're generating significant cash from operations and also putting it to work for strategic growth through CapEx and acquisitions. How about returning value directly to shareholders? Buybacks.
Dividends.
On the financing side, they used $2.1 billion in cash, which was up from $1.1 billion in 2023. A big chunk of this was common stock repurchases. They spent $862 million buying back 5.9 million shares.
Okay, using buybacks to return capital. Yes, under their approved $12 billion stock repurchase program. As of the end of 2024, they still had $4.7 billion remaining authorized for future repurchases, so they have room to do more.
And dividends.
It's important to note here the company explicitly stated they do not expect to pay dividends in the near future.
Okay, so the focus is on reinvestment and buybacks, not dividends for now.
That seems to be the clear strategy, prioritizing reinvesting cash into driving growth, particularly in AI, or returning capital via share repurchases.
So with all that in mind, this segment performance, the financials, the strategic moves, what does this tell us about AMD's strategic direction moving forward? How do they see themselves positioned in this rapidly evolving tech landscape, especially with this AI tsunami everyone's talking about?
Well, the company firmly believes, and they state this quite clearly, that AI will drive the most significant transformation in computing history. They see it creating unprecedented growth opportunities.
And where do they fit in?
They explicitly state they see themselves uniquely positioned to be an end-to-end AI leader. That means across the cloud, down to the edge, and onto end devices like PCs.
End to end. That's ambitious.
It is. And this isn't just marketing speak. You can see it in their actions. Their strategic focus is clearly on enabling AI capabilities across their entire product portfolio, CPU, GPU, and their adaptive computing solutions like FPGAs.
So this strategy isn't just about having one killer AI chip like a GPU. It's about embedding AI capabilities everywhere they play.
Exactly. It's a holistic approach. This involves extending their leading product portfolios, EPYC, Ryzen, Radeon, executing that multi-year roadmap of AMD Instinct AI accelerators we talked about, broadening the adoption of their embedded and adaptive solutions, and crucially, building an open, full-stack AI software ecosystem, really strengthening RSCM with the speed and scale of the open-source community. That commitment to an open ecosystem is potentially a significant differentiator compared to, say, NVIDIA's more closed approach with CUDA.
Right, the open versus closed ecosystem debate. That could be key. But the road ahead isn't without its challenges, is it? Beyond just the competition, what are the big systemic hurdles they'll need to navigate?
You're absolutely right. It's definitely not guaranteed success. One major challenge is just the inherent cyclicality of the semiconductor industry itself.
Boom and bust cycles.
Exactly. It's prone to downturns, rapid technological change, and wild demand fluctuations. Broader economic uncertainty, things like inflation, interest rates, can also impact consumer and business spending, leading to those inventory normalization issues we saw hit their embedded segment.
And that reliance on those third-party manufacturers, particularly TSMC, for the really cutting-edge chips, that must be a constant strategic concern.
Absolutely. That significant reliance on partners like TSMC for advanced nodes and various assembly partners, it poses ongoing risks. Supply constraints, yield issues, impacts from geopolitical events. It's a complex web.
And then there's the growing regulatory environment you mentioned earlier.
Yes, increasing global regulations, especially those U.S. export controls on advanced computing items going to China and other specific countries, that can truly limit market access and directly impact product roadmaps and potential revenue. This isn't just a minor hurdle, it can fundamentally reshape where and how they compete, especially in AI.
And finally, just the relentless pace of innovation itself. They can't afford to stand still for a moment, can they?
No, not at all in this industry. The continuous need for product innovation, for timely introductions with superior features, better performance, better energy efficiency, it's paramount. If you stumble, you fall behind quickly, and that leads to competitive pressure and price erosion.
Yeah, we haven't even touched much on security.
Right, and that's another huge one. The increasing sophistication of cyber attacks poses ongoing risks to their operations, their valuable intellectual property, and ultimately their reputation. It's a constant battle.
All told, though, it sounds like AMD navigated a complex 2024 with a pretty strong financial rebound, wouldn't you say?
Yeah.
Largely propelled by that massive growth in data center and the solid recovery in the client segment.
I think that's fair. Their aggressive push into AI, coupled with that commitment to an open software ecosystem, signals a very clear strategic path forward.
They've definitely made significant strides, transforming themselves, really, from being seen primarily as a CPU company, maybe an underdog, to now being a formidable challenger in AI GPUs and positioning themselves as a comprehensive AI solutions provider.
Indeed. They've really broadened their scope and raised their ambitions significantly, particularly in the last few years with key acquisitions and the AI boom.
So as we wrap up, what really stands out to you as you consider AMD's journey and its path ahead? Here's something maybe for you, the listener, to think about. Given AMD's ambitious drive to embed AI capabilities across its entire product portfolio and that strong commitment to an open software ecosystem, how might this strategy uniquely position them to navigate the inherent volatility of the semiconductor industry and secure long-term leadership, especially as AI becomes increasingly pervasive, woven into our daily lives?
That's the key question, isn't it? Can that broad, open strategy give them the resilience and the reach to truly compete and lead in the AI era? It will be fascinating to watch.